You're live.
Good morning, everyone. Good morning, good afternoon, good evening, depending on where you are. My name is Anu Basu, and I'm a professor of entrepreneurship at San Jose State University. And we're really excited to be here at your last session this morning, afternoon, evening on COVID's impact on Silicon Valley, its startups, and its startup ecosystem. So we have a fabulous panel here today to discuss that, and I'm going to invite each of them to introduce themselves briefly. You already, of course, you've read their bios on air. And so now over to you, Angela. We have Angela Tran.
Hi, everyone. Thanks for having me this morning or evening or afternoon. My name is Angela Tran. I'm a general partner of a early stage fund called Version 1 Ventures. We're on our third fund, which is a $50 million vehicle that invests in pre-seed companies and seed stage companies across North America. I was born and raised in Toronto. I moved out to the Bay Area in 2010, where I started a company where we took the top PhDs, trained them to be data scientists, then placed them at companies like Facebook, LinkedIn, Google, Twitter. This company is called Insight Data Science, which has a little bit of a global presence. So maybe some of you have heard about this company. What else can I tell you? I think I'll just pass it on from here because we're going to be covering a lot of material today.
Thanks, Angie. And then we have Sanjo Jose, and CEO of Talview. Sanjo, over to you.
Thank you. Thanks, Anu, for having me, and excited to be part of this discussion. Very relevant, right, with whatever is happening in the world right now. I'm co-founder and CEO of Talview. At Talview, we are building first of its kind AI video platform for talent, where we enable organizations to embrace remote learning and remote hiring in a digitized world. And we are a team of 140 people headquartered in the Bay Area here in the US. And we also have an engineering and operations center in India, in Bangalore. I personally am a serial entrepreneur. This is my second startup in the space. And prior to that, I grew up in southern part of India in a small village and graduated as an engineer and worked with a couple of MNCs before starting my entrepreneurship journey. Thank you.
Okay, thanks. Thanks, Sanjo. And then last but not least, we have Sudhir Kadam as our third panelist. Sudhir, over to you.
Thank you, Professor Anu, for the introduction. I'm the venture partner at FIDA Growth Partners. I'm also an entrepreneur and startup advisor. Basically, I'm an entrepreneur turned into a startup advisor. We are purely exit-focused company, not chasing unicorns, but B2B startups that are built on foundations of sustenance and growth, using innovative business models and leveraging frontier technologies. I work with tech startups that have gone past adoption and ready to enter the growth stage. My area of work is more in growth acceleration, go-to-market, ongoing product market fit, and exit strategies. I'm deeply involved in startup ecosystems all over the world, but I'm also involved in open innovation initiatives for corporate startup engagement. I've had 6 exits so far, 4 as advisor and 2 as a corporate executive. So that's my intro.
Thanks, thanks, Sudhir. So as you can see, we have an entrepreneur, we have an entrepreneur, and actually all 3 are entrepreneurs. And then, with Angie and Sudhir are investors, and they advise startups as well. So that's great. So let's start off with Sanjo. And Sanjo, how has COVID-19 affected Talview? And what's been occupying you for the past 6 months? So in terms of strategy, operations, what's changed over the past 6 months?
Yeah, I think like everyone else, we are also coping up with the change of working remotely. So but that's common across everyone. But for us, we also underwent significant, I would say, changes in our go-to-market focus. So when we started Talview, from day one, our mission has been to build platforms which enable every professional to have the best career or build the best career for themselves. So it's all about eliminating divide or providing better access, cheaper access to better job opportunities, either by enabling better opportunities for job search, or through enabling better, more affordable access to education. So however, in the first part of our journey, we were largely focused on the corporate space by focusing on the hiring use case. And that's where we have built the business in the first 3 years. And when COVID happened, obviously, as you know, most companies, they took a pause on their hiring. Hiring was for a brief period of time at an all-time low, and now things are picking back up. But we saw a huge demand coming up from the education space for the platform which we are offering, because uh, education has to continue. There was no pause in education. Certifications had to continue. And we saw that the technology platform which we built was very much capable of supporting that demand, and it was already aligned with our core vision. So kind of overnight, we decided to enter into the education space more actively and launched a solution which focused on that space. And that has gone really well for us. So we've actually doubled our customer base. Around 6 months back, we had around 50 enterprise customers. Today, we have more than 100 customers, which is some apart from corporates. We also have some of the largest certification bodies, some of the big universities now using Talview's platform for administering exams and digitizing their entire certification or course exam process. So that was a big change, and we had to do all of this when we were also coping up with the transition from working in an office to working remotely. And we had a fairly young team, and we had some elements of I would say working remotely. So we had some of our team members, especially here in the US, already working remote. So we had some infrastructure in place, but getting the entire team to work remotely overnight was a huge challenge. And in that transition also, I wouldn't call it a pivot, but a significant change of focus, at least in short to medium term, where we saw education is what is driving demand, was a big challenge for the team. And that has been keeping not just me, but rest of the leadership and also the entire team on our toes. But I think the entire experience has been rewarding. We have been able to cope up well with that transition, and I'll speak more about that later on.
Okay. Yeah, that's really interesting. So you moved from, the market that you had originally, which was focused on hiring and, for B2B, and from that you moved to focusing on education. So that's very interesting. And so many startups have pivoted their business models, right, due to COVID-19. Angela and Sudhir, can you give some examples, one or two examples of companies in your portfolio that have pivoted? I mean, I would call this a pivot because, a change in focus of the target market is a change, leads to is defined at least by, in theory, as a pivot. So, yeah.
Yeah, I can provide an example. I would say that we were pretty lucky after the initial adjustment to COVID. Most of the companies in our portfolio recovered from shelter in place pretty quickly. They even thrived, especially if they were e-commerce tools, or, as Sanjo said, like if you're a productivity tool or the virtualization of something. We saw a lot of traction there. We had some companies, of course, that didn't even bother with the pivot. They just decided to wind down. But one company that I have in mind is a co-living marketplace that connects young professionals with landlords, with 3-bedroom, 2-bathroom condo. So imagine this as a home as a service model where you can move into a move-in ready unit with new roommates who are matched to your personality. And then our company provides cleaning services, stocking of the pantry, et cetera. So all the headaches of what it's like to live with roommates. So pre-COVID, the company took all the capital risks, furnished the apartments, paid for all these services, and made sure that the experience across units were consistent. Now, post-COVID, we still have the marketplace, but we're more focused on delivering SaaS tools to help landlords provide these services. That way, we don't have the capital risk, and it increases our runway, given that, as we all know, real estate in this time is a little bit frothy and uncertain. So that's one example. Maybe Sudhir can provide some as well.
Yeah, I'll give another example here. You know, I had a company in my portfolio that was on events management, and as you know, events are dead, right? They are all become virtual, and this was a physical event management company, managing events for a lot of corporate organizations. And so suddenly one fine day, nothing is going to happen, right, for a long time until it comes back. So we pivoted this company literally, and we turned it into an online virtual concert company. Okay, from events we went to musical concerts, and there were a lot of young artists who wanted this exposure, and this was a perfect medium for them to get that exposure. And we could add a lot more to the concert experience in terms of multiple people collectively watching the concert together from different parts of the world, being able to throw up some statistics about the performers and all that. And our first concert will be launched next week, where we have Jamaican singers live on that concert. Okay, I would like to give you one more example, and that's for a company that was into computer vision. Okay, so we were doing computer vision for construction. Okay, so we were trying to look at how the material is moving, how the equipments are being used, the worker productivity with deep activity recognition, and so on. And suddenly, the construction industry came to a grinding halt. And so we looked at the situation and said that, okay, if these people have to get back to work, how do they get back to work? Okay, there are certain regulations, there are certain compliances that they have to comply with. So we came up with a COVID solution. Okay, and we said that, okay, we can measure the distance between people, we can see the PPE equipment, whether they're wearing it or not. And we can even look at some of the safety elements that are being proposed in by the counties and by the states, right? So, and imagine what happened now. Okay, so now we go as a COVID solution, and a lot of construction companies are willing to let us into their door. Okay, so that's the strategy, right? You go there, get your foot into the door of the customer, and then you can expand from there. So these are the two examples. So what I tell startups is, look at the context, look at the motivation of your customer, and look at the outcomes that they expect. Okay, what does the new economy need? What are the new challenges to be solved? Okay, and define your problem in terms of what we call as jobs to be done. Okay, but in context of the new normal that is happening. I think that's the trick.
Yeah, that is so interesting. That's of course so entrepreneurial that you face a challenge and you figure out, like, this is the new normal. So what do you do to change your focus? And that's absolutely true. So really fascinating. But just going back to Sanjo, so you kind of touched on that, but maybe you can expand a little more. Like it sounds like, okay, you were focused on hiring and in the hiring space, career opportunities for professionals, and then COVID hit, and you said, okay, well, let's look at the education market. But I'm assuming that everyone in your company was like, they were experts on hiring, right? And that's kind of a little bit different from education certification. So like, can you just share like one example of what did you have to do? Did everyone have to be retrained, or did they go for, how did they do the research on the education market to figure out where exactly, because there are already competitors there, right? So
Yeah.
How did they go in there? Did you have to hire someone from the education space, or did you just retrain them? How did you do it?
Yeah, no, you're right. So we built an organization from day one to focus on hiring or corporate as a space, and most of us had that background and had I would say deep understanding of the hiring ecosystem, but not as much as we would like to know about the education space. And one of the first things which we did was, so we were lucky to have my VP of marketing. He had significant experience in the education space. So he was just prior to Talview, he was VP of marketing for one of the largest edtech companies in the US. And so that helped us. So we quickly divided, I would say, our go-to-market organization into two vertical teams. So the first one, which continued to be led by my VP of sales, who had a hiring background and had deep understanding of the space. But we carved out a separate team from a go-to-market standpoint, which was I would say guided and advised by my VP of marketing. So he did a lot of initial outreach, came up with strategies on how to go to market, especially in the education space. And a lot of it was largely inbound driven. So we were getting a lot of inbound demand from the space. So the focus was really on how do we cater to that inbound demand. So that helped us quite a lot in terms of adjusting to this change. And that vertical focus, I believe, so, and it was not actually just two verticals. So initially, it's not that hiring had completely stopped. There were segments where hiring was at peak. For example, we work with organizations like Amazon, where hiring went through the roof with COVID, and there were many such other organizations as well. So we identified different segments because we anticipated that hiring would take a major hit, and there will be certain segments which will do well, and there are segments which won't. So within hiring also we created different segments, and then we also created a segment for education. And within education, we initially we were also seeing a lot of demand from K-12, where schools wanted to do their exams online towards the end of school year and things like that. So we created a vertical for that. And then we started experimenting with those verticals and see which of them were like scaling or we are getting traction. And then finally it came out that, okay, a lot of our traction, specifically in the education vertical, is coming from the certification and online higher education space. And we also realized that that's where there will be stickiness even in long term. So that really helped us to, that creating vertical teams helped us to quickly iterate, figure out what's working and scale. The other big thing for us was internal communication, because as a business, I think we were still doing okay. We had customers who were scaling, and then the new space was evolving and growing rapidly. But there were a lot of uncertainties in generally amongst employees, right? So you are making this transition from being in office to going remote, and you're everywhere else you're hearing stories of layoffs. And we are like all of a sudden we are pushing everyone to do more because we need to adjust to this change and be in a better position to make use of the opportunity. But we realized that there are a lot of uncertainties, there are a lot of fears within the organization. So and then there is also the knowledge gap. Okay, so you're getting into a new space, you're talking about new use cases, new I would say new set of customers, your customer personas are changing. So we realized that communication is very important. So we started doing daily stand-ups. So the entire organization at that point, we were more like 100 and we grew to 140 now. But the entire organization would get on daily stand-ups every single day and talk about what's happening, how are our customers doing, why are we getting into this space, how is this space different, what are the different use cases. And also talk about things like cash flow and things like runway and all of that, so that there is that sense of confidence and that we are moving in the right direction. So that was critical. Then so I think that those were the two most critical changes we made in the first phase. And then we saw that, okay, it's working, and we doubled our customer base in the last 6 months. But that also meant we had to significantly re-engineer our customer journey. So right from the way in which we onboarded customers, because now we are onboarding. So we typically used to onboard 8 to 9 large enterprises in a quarter. And now we are onboarding like 30, 35 customers every quarter. And that change required a completely different approach towards customer onboarding, completely different approach towards how we even make product upgrades, a lot of those things. So we had to re-engineer that entire customer journey, and that was, so then we created a horizontal team. So we had every function, whether it's customer success, engineering, operations, product, every function. We created horizontal teams which are focused on re-engineering their processes to cope up with the change in both I would say use cases and also the journey of the customer, the scale, and all of those things. So that helped us to adjust very well with the second part of the journey. And in between all of this, we also had to hire. So we grew the team by almost 40%. And hiring during COVID was also a challenge. Most of the good talent, they were risk averse. They didn't want to leave their current companies because there is a lot of uncertainty and they don't know how things are going to change. But that was another challenge which we had to cope up, and I think we did finally.
Yeah, we have a question. Am I muted or unmuted? Sorry, yeah, muted. Yeah, thank you. That's really interesting. So I was just thinking that we share with our students that, you know, one should focus on one market and a target market segment. But when you have to make these changes really rapidly, what I got from you is that you looked at like multiple, you know, verticals and quickly figuring out which was the most promising to go after, because after all, it's not something that you had, that wasn't your original strategy. So there was the external side that you had to quickly, you know, check out and make decisions on which one seemed most promising. And then internally as well, you had to figure out how to cope in, you know, communicating within the company. And I'd love to know more about that. I think we'll get a chance to discuss that hopefully further. There'll be questions on that, and I have some too. So a lot of changes there. And so now moving a little bit in terms of topic to Angela and Sudhir, what are you finding? How has startup funding been impacted by COVID? And, you know, have your investment criteria changed, Angela? Who are you funding? Who are you not funding? And likewise, Sudhir, what are you finding in that space in terms of, you know, funding of startups?
It's a good question, and maybe I'm speaking out of turn by saying I think most venture capitalists, and maybe Sudhir can support this as well. We were all anticipating a discount with risk aversion in March and April, but it seems like the markets have been super resilient, and as a result, startup ecosystem has never been more busy, and valuations just continue to climb. So with that said, capital is still in abundance, but perhaps the process in which investors make decisions have likely changed. I think there are still questions on whether, you know, later stage or growth stage investors are comfortable getting deals done that are super big without meeting entrepreneurs in person. And so what this means for an entrepreneur is if you're pitching a big partnerships, the logistics around that can be non-trivial, unlike before, so you'll need some patience. At the early stage, at least for our fund at version 1, we're such a small team of 3. I'm one of 2 general partners, and we have an associate, and that's it. So we've always been distributed. We've always been flexible and agile, so we haven't really needed to adjust much. But in terms of criteria, I'd say we're prioritizing, just as always, the quality of a founder and big markets. And maybe now a new thing to think about is resilience to a pandemic. But in all seriousness, I'd say we're generalists during this time. Since we're generalists during this time, we have to be sure that we're not driven by the momentum of certain themes, like the virtualization of XYZ, right? Whether it's healthcare, whether it's fitness, et cetera. We want to make sure that we're not just backing opportunistic entrepreneurs who see this as a time to build. We want to really invest in those who have domain expertise, who have thought about this space for a long time. And maybe COVID is an inflection point, but they're certainly thinking about what their company is going to look like when we go back to normal.
Yeah, so I would like to add to what Angela said. You know, there are certain startups that are seeing a boost now because of COVID, you know, because of this low touch economy, because of virtual interactions, contactless transactions, and so on. Okay, so those are the startups that are seeing a very positive move, right, from the VC perspective from the investor perspective. But, there are this other set of startups, if you look at startups in travel, hospitality, if you look at startups in fashion, okay, they are severely impacted. Okay, so it's a mixed bag for the investors, depending on what is the area that you're investing in. Okay, so I have seen many term sheets being pulled back, renegotiated. You will see that the markets are very, very positive. You can see the stock markets as well as, and the private markets are completely different from the stock markets, like public markets. So they have a bit of resilience there, because all these VCs are sitting on $150 billion worth of money to be invested, and they got to invest it, right? They just can't keep the money from the funds in their pocket. They have to invest it. So they are trying to be creative where to invest. But what I have seen is, if you're looking at Series A, Series B kind of funding, the valuations have been lower. There are flat rounds, and the fundings, earlier somebody would write to you a single check. Now it's not happening like that. They are coming in terms of multi-stage tranches. Okay, so the late VC funding remains relatively stable, because the investors are trying to push their money into startups that have a track record, okay, that hold the promise of a safety net for their own money. So they have to double down and invest over there. But if you generally look at how the investment paradigm has changed, so we have gone from growth to path to profitability. Okay, earlier we would all double down on growth. Okay, I want to see this hockey stick growth. Now growth is not the only criteria. We want to see a very clear unit of economics. We want to see path to profitability. We want to see faster break-evens. Okay, we want to see ability to conserve cash. Okay, so not just splurge money. How can you conserve cash? How can you do more for less? And the emphasis is all on burn rate, customer acquisition cost, and also, can this startup raise money or raise debt in, if they happen to run out of cash? So what is their revenue model? Does it make them eligible for revenue-based funding? And and it's people are moving from pure equity now also to venture debts. Okay, so it's a balance of equity and debt that is happening. So startups are getting funded, ones that are able to articulate their strategy and roadmap to grow and thrive in the new normal, and substantiate that with traction, pipeline, everything. But investors are looking for founders who are playing to win, not just playing to survive. They want to see these founders are not just getting through this hump of a bad economy, but who will survive, as we get to the new normal.
Angie, would you agree with that?
Yeah, absolutely. Mm-hmm. Always looking for people who are thinking bigger than the current moment, right? Which is, I think, what I alluded to with if we're investing in companies, it's great if they're seeing COVID as potentially an inflection point for their particular area. But certainly we want to see business, like a sustainable business model, when we get back to quote unquote normal life.
Right. Yeah. And so, so essentially what you're saying is some of those characteristics remain the same, typically domain expertise and, going for a large market and something that's going to survive beyond this, the COVID, this present circumstances. But also what Sudhir is saying is, if I got that right, that it has affected valuations to some extent for the early stage startups. And so they need to show more traction before they can get funded. And they need to show that they can remain, they can be profitable sooner.
I can add to that, if you wish. And, according to the statistics that I have right now, about 40% of early stage startups are in the red zone. That means they will run out of the runway in the next 3 months. Okay, and that's why, we can talk later on in this session, there is an interesting thing that is happening in the ecosystem in Silicon Valley. You're muted.
Oh, Anu, you're on mute.
Sorry about that. It's a bit confusing. So moving on, so we can maybe get back to that. But I wanted to ask Sanjo, he's touched on that, but what challenges and opportunities does COVID-19 pose for Talview? And so it seems like you're doing pretty well. You've got more customers to onboard, but so that's fantastic. But what do you see, as some other? Are you going to remain in this space? Are you moving to the education space? Or are you going to be in both? Or so anyway, what are the opportunities and what are some challenges that you see?
Yeah, no, I think from our perspective, when we were initially evaluating our strategy at the beginning of COVID, we were very clear that we wouldn't be successful in doing something which is not aligned with our mission, because Talview as a company has been mission driven. Our focus from day one has been on how we create a level playing field for every professional to build the best career. I spoke about that at the beginning. So, and initially we focused on hiring because we believed selling to enterprises, making their pace of adopting technology, their clarity of decision making is better. So we chose that as a space. But when COVID came and we saw a significant demand from the education space, we saw that it was very well aligned with our mission. So on one end, we were eliminating friction from the job search process by working with large enterprises to digitize their entire hiring process. But we saw that we could use the same technology to make education more affordable anytime, anywhere. We could, and a lot of inefficiencies which was existing, especially in the certification and online course exam space, where you had to go to a physical assessment center, spend a lot of money to have access to that assessment center, and then there are geography limitations, that there are a lot of human or manpower involved in the processes. All of that can be eliminated, and we can make this entire process a lot more, I would say, convenient and significantly more cost efficient. And that's a change which we, so it was aligned with our vision. Then the second thing which we checked for was, okay, is this a short-term trend? Will things go back to physical centers or go back to the previous ways of doing things post-COVID? And we realized that, okay, there is, because this certifying bodies, this online higher education providers, they do not have physical premises. They were typically relying on third-party providers to provide this infrastructure and human capital to do this process. There is no reason for them to go back to the physical way of doing this, or a non-virtual way of doing this post-COVID. So we saw that there is stickiness with this business, and the space was large enough. So what we realized is we can use the same technology platform. It's aligned with our mission, and that space is exploring. So we could we could add one more sail to our ship. So we were already growing very consistently. We have been on a good growth journey. But with this addition to our offering, now we have kind of two sails on the ship and can grow even faster. So that's the way we are looking at this entire transition right now.
Thank you for that. And Sudhir and Angela, what do you see as the challenges and opportunities for startups more generally?
I would say on the opportunity side, and I think we're going to touch upon this perhaps later today, but for startups, I think COVID has really made us question whether or not whether we have to build a company in Silicon Valley. So I think on the opportunity side, as we had seen before, with the cost of computing going down with AWS, GCP, Azure, suddenly hiring can be more efficient because you can hire remotely. So I think there's that opportunity of even building more startups. On the investor side, I think the opportunity personally for me is that it has leveled the playing field. So for someone like me who loves networking, but doesn't love networking past 10 p.m., it's nice that I can now do tons of sourcing and work on my deal flow at home. Of course, this presents challenges as well. So when I think about the challenges on the flip side, and this applies, I think, to both startups and investors, internally, working from home poses its challenges, right? So for those of you who have families, et cetera, it also affects our mental health, burnout, because you can just stack on Zoom after Zooms. Even for us as a fund and for startups, we think a lot about culture and not being able to be physically present with our team. So that, I think, are the internal challenges. And then I think externally, it's going to be really interesting to see what happens in the next couple of weeks. The flu season's upon us. We expect a second, or if you're in the US, a continued wave of COVID. North America is getting colder, which means that the restaurants and businesses that could provide services outside probably won't have that luxury anymore. That probably will trigger more unemployment, which affects spending during the holiday season. So as you can imagine, this is going to affect startups, especially those that are consumer facing. And of course, I don't want to get too political, but we all have this big decision that's going to be made on November 3rd in the US. And depending on what administration we have after that, I think it's going to really affect how business is going to be done in 2021, how quickly we get back to work in person versus not. So lots of opportunities and challenges, but also a lot of certainty in the next couple of weeks.
Yeah, absolutely. Sudhir,
I would agree with Angela that, there are a lot of opportunities and challenges. They come together, right? So whenever there is a major event, that has a social or economic impact, this obviously leads to behavioral changes, which when coupled with technology enablers, new technology enablers, will cause industry shift. And that's what we have to look at, what are the shifts that are occurring. If you remember, the last recession was a very fertile era for unicorns, okay? Uber, Airbnb, Square, Group, Slack, they are all babies of 2008 financial crisis. Okay, the shifts were in terms of gig economy, sharing economy, disintermediation models, okay, and the technology enablers there were cloud and smartphones, right? In the case of Corona, it's a pandemic impact, okay? It is in terms of constrained mobility, contactless interactions, the spending power, which has declined, time to regain normalcy. So this is causing a behavioral shift. As they say, it takes only 21 days to form a habit. Okay, we are in this for 5 months. So our complete habits and behaviors have transformed. And the technology enablers this time are AI, computer vision, robotics, autonomous operations, IoT, gigabit internet speeds, okay? And on the horizon is 5G, okay, to take the edge computing to the next level. So all this will be put together by very creative entrepreneurs to come up with new categories, new solutions, okay? So remember, the jobs always remain the same, okay? It is the solution that changes. The solution that changes because the behavior has changed, because the economy is different, and because the technology enablers have changed, okay? So a lot of good things happening, and as she said, there are challenges and there are opportunities, and that's what innovators in Silicon Valley love, right? We love the challenges because we see in chaos there is opportunity, and there is a lot of chaos around us, okay? So
that's a good one, that in chaos there's opportunity, and usually the worst times economically tend to be the best times for identifying promising startups, right? That's what we've seen in the past as well. So you did kind of touch on it. Any issues with working from home, or is that fun? Angie said, yeah, that's true. You don't have to go out.
I don't have kids, so it's fun and doesn't make it's not too much of an adjustment. But what I can say with what we've seen with some of our portfolio companies, I've been pretty impressed with the creativity to sustain their culture. So beyond, Zoom happy hours, we've seen companies with daily themes for the week. So Monday might be like wear blue, right? And so that, everybody who hops on Zoom see each other wearing the same thing. Or we've seen companies do online cooking together. Some have gone very far into say like Fridays you can take just Fridays off. But again, the focus is really on helping people have that balance and focusing more on getting things done eventually, and not just on like between 9 to 5.
Yeah, so to that, sorry, am I muted now? Okay, now. So to that, I would like to add that working from home is fun, but it's VCs still have to learn how to write check over video meetings. Okay, it is something that people are not comfortable doing. Okay, you want to see the person in blood and flesh right in front of you. You got to be able to see the chemistry of the team sitting in front of you, the ability to present. Right now, all that you get is a bus-sized picture on a flat screen. You don't even see it in 3 dimensions, right? So that is one challenge. The other challenge is obviously in terms of the conferences. Okay, so this is where the showcase opportunities for startups in digital formats. It is not like the meet and greet exhibition booths that you can have. The co-working spaces are dead. Okay, they're completely deserted right now. Okay, this used to be the throbbing centers of startup activity. Okay, they are completely deserted. So from that aspect, there is a change. I know. Yeah, I'm personally hoping to get back to coffee shops and start talking to founders, or a cup of coffee, and nothing more interesting than that. Okay, so I think we have to wait for something to come back. In the meanwhile, we have to live with what we have, right?
Right. Yeah, that's what I was thinking. Like, how do you build trust with entrepreneurs,
Exactly.
over Zoom? But Sanjo, did you want to add anything? Work-life balance, are things going well? No challenges or any?
I think it is challenging. I have 2 kids, and it's pretty much, while they have online class, it's pretty much like we are doing homeschooling for them. We have to spend a lot of time with them right now, and hopefully things will go back to normal pretty soon on that front. But even outside that, I think as a startup and as a founder, this managing culture, or keeping the culture and growing the culture, which we have been I would say carefully curating over a period of time, has been one of the other big challenges. Right from onboarding, so we had an onboarding process which was very high touch for every new employee, and where even when we are hiring somebody remotely, let's say in the US, so probably I would travel to that location, meet them, and spend some time with them in the first few weeks, things like that. So we had that very close knit culture, and now all of a sudden we had to do this entire thing remotely. So we had to re-engineer those processes well. So one of the first things we did was to implement a new onboarding tool, which had a very intuitive, high-touch experience, though remote. From an onboarding standpoint, we focused on creating a lot of artifacts which captures the ethos of the organization and ensures that there are enough checkpoints and managers are spending enough time with the new hires. So that was one important change for us. Second, even in general, so we saw that there is a significant difference when you're on a call with video on and video off. So and many times, especially initially, people are not comfortable doing that. So I had to literally, so like we would do daily stand-up calls where I wouldn't start the call till everybody come on video initially, because you want to it's very difficult to understand the mode of the organization, what people are thinking, all of that without having a uh, without seeing the face of the person. And that's something which I think a lot we have increased the frequency of connects. So we were doing monthly all hands, but we do more sometimes smaller team connects, sometimes entire organization connects more frequently. The HR team has been spending a lot of time on continuing to preserve that kind of family-like values within the company, in terms of, so we do a lot of fun activities online. There's a lot of engagement, whether it's even simple things like quizzes and treasure hunts, which happens online, but it keeps the spirit alive, especially because we are going through all these changes. And we are asking a lot from the team right now, because we see this as an opportunity for us to it's an inflection point, like Angie mentioned, and we wanted to ensure that we are not we are making the best use of it. But we are also very sensitive that we are asking all of this from the team members during a difficult time. It's not just me. Many of my employees have kids, or we have young employees in India where many of them like stay in. I'm not sure whether everybody is familiar, but there are like paying guest facilities in India where young employees, they might not have the infrastructure available where they are staying to even work remotely in a calm and quiet environment. So we had to reopen our offices for some of them, but then we also had to ship hardware. We had to provide infrastructure support. So I think a lot of those things we had to cope up with, and I think culture. Initially, we were a little worried, but with a lot more additional, more proactive efforts, I think we have been able to uh, preserve what we have and continue to build that. But that's going to be challenging. I think at our scale, it's already challenging, but for organizations which are bigger, it could be even more challenging.
Yeah, thank you. I totally agree with you about the videos, and even in the classroom, and I've asked my students, I've said, I would strongly encourage them to keep them on, because otherwise it's so hard to interact with them in the classroom as well. So moving to Silicon Valley and the impact of COVID-19 on Silicon Valley's startup ecosystem. So they alluded to that in terms of the meetings that constantly happened, the as we say, little sort of business ideas written on napkins and so on. But at a slightly different level as well, have you seen an impact on immigrant-led startups here in the Valley? There's a question saying that, quite rightly so, that we are all, 4 of us are immigrants here. And as we all know, the United States, and particularly Silicon Valley, is built on immigrant-led startups. And so have you found any change in the number of immigrant-led startups since COVID-19 over the past 6 months, both because of COVID and also because of, policies towards immigration from the current administration? So
in the short term, the answer is no. Okay, in the short term, the answer is no. But it could have a long-term effect on that, because if the immigrants are not coming to this country, who have these fantastic aspirations to build startups over here, then the country is going to suffer, because innovation is really important, right? We have been always on the bleeding edge of innovation, and that is what is keeping US ahead in the game. So in the long term, it will have an impact. Right now, not so much of impact, because there have been a lot of layoffs right here in Silicon Valley as well as the rest of the world, right? And there is an excess manpower available right now to be tapped into. And these are immigrants as well as non-immigrants who can find the jobs in terms of the jobs. But in terms of starting a startup, okay, the people who are here, the immigrants who are here, see no difference between doing a startup as a non-immigrant over here. So I think US is the land of opportunities, and it is equal to all the people who are here legally, right? But the new breed of people who want to come over here certainly have challenges. Like, for example, there are some very interesting startups in Europe, okay, who want to expand over here, okay, so they want to bring their wares over here. They would certainly have challenge, if they want to relocate their people over here. But if they want to hire people over here who understand the local economy, the local culture, and the local processes over here, I don't see that as a problem in the short term. But I think, people will be soon to realize the shortcomings of not letting the right immigrants into the country, and things will open up. I think, that's the hope that I harbor.
Angie, have you found any change in the startup ecosystem? And so it's a double question on the startup ecosystem and, immigrant-led startups, the number of immigrant-led startups that you've seen the past 6 months.
I don't think I have anything to add to what Sudhir has already mentioned, but ironically, it's actually really hard to know where people are right now because everyone's on Zoom anyway. So to his point, I think short term, no effect, but we'll get to see what happens in a couple of months or even a year or two from now.
Yeah, I'd like to answer your question on the startup ecosystem. There is something very interesting happening over here in the startup ecosystem right now. Okay, as I told you earlier, that there are a lot of startups who will run out of cash runway, right? And they are in a red zone, as we call them. And if they are unable to raise, improve their cash flow or raise bridge funding, they will die. Okay, so what's happening right now in Silicon Valley is really interesting, and this is how Silicon Valley comes back. Okay, and this is what a lot of ecosystems outside the Silicon Valley have learned from here. So you do not want these startups to die. So what do you do? Okay, so there are a lot of deals that are happening now in terms of acquiring people. Okay, so let's say you have a startup with 10 strong data science people, okay, all 10 PhDs from great places, in the US universities. You need those people, right? So people like Facebook and so on will try to acquire them. Then there are tech acquisitions. You know that the startup is going to fail, but has a nice piece of technology here in AR, VR, computer vision, or AI. So they will get acquired, licensed, and so on. There are asset acquisitions, okay? So these are like forced exits that happen, but this is like a bailout safety net for the startup entrepreneurs, and who is steering this? The investor community is steering, because they have put some money. They don't want their startup to die. They see that they are good founders, and if they're given a new opportunity, they can flourish and blossom, right? So they want them to, okay, so self-disrupt, throw away what you have right now, build something new. We will help you get out of that situation. So lot of such deals I get to work on these days. More than the investment, we want to see that we provide a safety net to the startups that are likely to fail.
Right. Okay. So Sanjo, there's a question here that I think that's really great. You had to make all these changes, and are you finding that you can use some lean startup approach? Like, how can you, as an entrepreneur, like how can you minimize the amount of money you have to invest in making these changes and pivots in your strategy?
Yeah. I think doing things lean has been part of Talview's and probably us founders or DNA from day one. We are not one of those companies who have raised a ton of capital to reach where we have reached right now. I think for a company of our stage, we have been very cash efficient. In fact, if you look at metrics like Bessemer's cash conversion ratio, which is something which many VCs, especially in the Valley, uses, and a good benchmark is around a ratio of 1. We are more around 1.5. So we've been very efficient from that standpoint, and I think that has really helped us to do also make these changes during this tough time, because we were not really worried about our cash flow. While we do have some burn right now, we can turn profitable in a very short span of time if we want to. I think that has given that DNA has significantly helped us to, I would say, to survive and also in many ways thrive in the last so many months. And yeah, I'm not a very I think every startup has to be lean, unless you. So when you look at building a company, right? So the first thing you look for is founder problem fitment. You, as a founder, you need to have the right kind of expertise, and you need to have the right kind of alignment with the problem you're trying to solve. And then there is the problem product fitment, where you're building a product which is solving that particular problem, and then the product market fit. So unless you're a company where you've reached a product market fit, where you need to go for a land grab and scale at the highest pace from day one, I'm based on my experience, I'm a strong believer that you have to be leaner early stage, and go through that right evolution of problem. So problem founder fit has to happen from day one, but from problem to product fit and product to market fit, and really accelerate once you reach there. And then and that's where you need to raise a ton of capital and grow as fast as possible. So in early stages, it helps to be leaner, and I think we're right now at the cusp of that transition where we want to probably be a lot more aggressive with our acceleration. Yeah. I know you're on mute. You're still on mute.
Professor Basu, you're muted. Yeah. Now you're okay.
Yeah, now okay. Just so has Sanju, I didn't ask you whether, if you want to say in a sentence, whether COVID-19 has actually affected. Have you found any change in doing business in Silicon Valley, or it's been the same so far?
I think from a go-to-market standpoint, if you're asking about that, we do have seen like customers. So there is a lot more urgency, especially in our space, because we are part of what many people today call the remote stack, with technologies which help companies to go remote. So we have seen a lot more urgency in the buying process, which is also helping us in terms of customer growth. But there's also smaller budgets. So we see that especially the initial contract size has come down. But we always had a land and expand strategy. So we are very bullish about how the current change will help us in medium to long term. And even from I would say, like there are a lot of customers who have taken a lot more time to make decisions also, especially the larger ones, because they're the bigger projects like RFPs, which we were part of, that they had to relook at their entire strategy, their hiring numbers got revised and things like that. But I think net, we have benefited overall, whether it's the pace of deals or the excitement from the customers. The other part of the ecosystem, especially with the VCs, I think I echo most of what Angela and Sudhir mentioned. I think there is initially we saw a lot of outreach from probably VCs who felt, okay, we might need cash in a short time frame, and they could get discounts if they come in right now. But I think now we are seeing a lot more inbound interest from VCs who have understood like how our space is evolving, and they see how we are at an inflection point, and are willing to partner with us and commit with more long-term focus. So I think that first few months it was a little like we saw more opportunistic in outreach, but now it has gone back to how it should be. Yeah.
Thank you. So looking to the future, what are the opportunities you think are going to be? If you were looking into a crystal ball, what do you think would be the opportunities, Angie? What are you seeing in Silicon Valley that's exciting you in terms of new technologies that might emerge or accelerate that,
I think outside, the remote being all the rage and virtualization of everything. I don't know if this is so correlated to COVID, but I think there's two technologies that we as a fund and are excited about. I think the first, and is far from my expertise, but where my partner spends a lot of time, is in crypto and blockchain. I think governments printing money, we're starting to see a drop in confidence in the traditional US dollar. So this is an area that is super hot right now. I don't know if anyone in the audience is looking at Ethereum, Bitcoin, but it's just gone bonkers over the last couple of weeks. Another area that personally is an opportunity for me is in climate change. I think the lesson we've learned here as investors is that we definitely need to be more forward-looking. Just the fact that none of us could really predict a pandemic was coming, but given all the investment and research that's been put into tackling COVID in the last 6 months, I'd like to think that we're more prepared for this kind of pandemic in the future. But if we look at what's happening on the West Coast, what's happening in our backyard with everything on fire the past year and a half, it's very clear that we are not doing our part to tackle that crisis. So what I'd love to see, and I think where many of us are focusing our energies on right now, are technologies on negative emissions, as an example. So those are two areas I think, kind of related to COVID, or just what we should be thinking about for our future.
Mm-hmm. There's actually a follow-up, maybe I can ask you here, which is that from the audience, that are there any guidelines for investment following the sustainability agenda? So that kind of it's a segue to what you said about, focusing on climate change and sustainability.
Yeah, so given that we are way more focused on the software piece of things, we're going to have different guidelines or criteria, I guess, for investment versus what if you were to invest in hardware and the deep science piece. So having said that, it's really hard to answer that question. It just really, really depends, right? One thing to think about, though, is, I don't like to bring up the political piece to it, but there are definitely opportunities to tackle climate change in other countries, more so than in the US right now. But obviously that hopefully will change. I think the good news with Silicon Valley in particular, when it comes to climate change, is we've always been pretty progressive. So even though the administration has pulled out of certain accords, et cetera, I think that the leaders here recognize that there is a change. So I hope that there is climate change and are willing to pledge to be carbon neutral. So I hope that this doesn't discourage any startups from working on climate change in Silicon Valley or in the US, because I definitely think there is an appetite and a market for it.
Okay, thank you. Sudhir?
Yeah, I think I'll just pick up the last piece on the climate change here. And sustainability is very important. I think if you look at the low-hanging fruit, this is carbon neutrality, right? And there are organizations like Microsoft and so on who have written down very clearly by 2030 we want to be carbon neutral, okay? And the fossil fuels have to go. There have to be new kind of equipment that has to come in to replace them. There have to be additive machinery to extract carbon emissions, and probably right now sequestration is a big challenge, right? What are you doing with the carbon dioxide that you're pulling out from there? You're trying to store it somewhere, so there is some real estate that you're hogging, or it is going into the ocean beds and so on. So how do we convert this into something reusable and so on? So I see this question over here on sustainability agenda. I think everybody is focused on sustainability, but there are specific VCs that work in this area. Okay, I'm not in that area. Okay, so I'm more in the frontier technologies and how they might apply their thing to sustainability. But there are VCs absolutely focused on sustainability, and so they would be the right people to lay out the agenda in terms of investments there.
And in terms of the new technologies, you agree with Angie about like crypto and sustainability. So I mean, like climate change. Sounds like.
Yeah. So any technology enabler that is going to move forward. See, digital transformation is now very high on the agenda of all corporate organizations, as we say, DX, right? And so forcing digital models, forcing virtual interactions, low-touch interactions, remote work, all this is going to be driving the future right now. Okay. Now, what you have to see over here is which of these are going to cause structural industry shifts, and which are these are going to cause cyclical industry shifts. So when I say cyclical industry shift, it means short term. Okay, so COVID is impacting fashion right now, but it's short term. Okay, moment COVID goes and people get back into organic interactions, the fashion will come back, right? So there are some who are impacted in the short term. There are some completely disrupted for the long term, like travel and hospitality, right? That is going to have a very long term effect on that. The industry is not going to come back so soon and so easily. Okay, there's a lot of struggle there. So if you try to look at in that parameter, the startups which are being pushed, which are structurally positive, and where the cyclicity is happening, helping, the COVID is helping, like e-commerce, food deliveries, all those kind of startups, video meetings, so all those are going to flourish, right? And so what you have to do is you have to figure out, how this behavior is going to change, and what technologies from AI, computer vision, robotics, all that I mentioned earlier, are you going to use to help them do the same job, but in a different way.
So, so what about, we have about 10 minutes left. What about the future of Silicon Valley? Do you think that entrepreneurs really need to be based here? And that's kind of, Angie alluded to it before, but, do you need to be based here? Do we need to be based here? Are you investing in companies? So Sanjo, to your point, you have a team over here in the Valley and you have a team in India. So like, is that how it's going to remain? Are you going to hire more people in India rather than here? And does it make sense for you to be here? And likewise, and for Angie and for Sudhir, the companies that you're investing in, do they have to be here? Or are you now investing in companies around the world, or in Angie's case, maybe in Canada? So who wants to go first?
Maybe I can go first. So I, in fact, for the last 6 months, I've not been living in the Bay Area. I'm now in Central California, and it's right now it's a short-term change, but probably who knows, based on how things evolve. But I think it's not just me. A lot of entrepreneurs, especially I came to the US only recently, and a lot of others have come in recently, and I've been kind of have been exploring these options of looking at other cities. I think for me right now, I can still travel to the Bay Area. It takes a couple of hours. So if I have a meeting, I can be there in a couple of hours. But I think there is a trend in general, especially I'm active in the India-US ecosystem of entrepreneurs, and there is a trend of a lot of entrepreneurs who were planning to relocate to the US now reconsidering that because everything is anywhere remote and people are getting more comfortable. I think even when things go back to normal, the comfort level which all of us have established in terms of doing virtual meetings, building trust through virtual calls and things like that, I think those things will remain. So hopefully, I think that will level the playing field for a lot of entrepreneurs across the globe. And I think as a larger trend in terms of building the team, even we've seen that it's not just entrepreneurs, even people like I've seen a lot of people moving to where I am right now, to Central California from the Bay Area, like software developers and sales professionals, because obviously the Bay Area cost of living is prohibitive, and there's opportunity for better quality of life if you're not in the Bay Area. So I think that availability of talent outside the Bay Area is also going to be better, because people are now considering or reconsidering the need or their choice of living in the Bay Area. So I think while we might not have a significant change in our composition of the organization, so we have most of our go-to-market functions in the US and the entire engineering and operations in India, and I think that will continue to be the same. But I think we might not. So we have an office in San Mateo, so probably we might not invest in having a larger office. We would probably have more people across the country in different parts of the country, and that's the way in which probably we'll operate going forward.
That makes sense. I mean, so many people are moving out because of the high costs of living here. Angie, how about you? Are you investing in? You're still here, right?
I'm still here. Yeah, I'm not going anywhere. But as a fund, we've always had a thesis that you can build a company anywhere, right? So we've invested in Toronto, LA, Seattle, New York, etc. But I think the key thing are kind of two or three components. any startup ecosystem that you invest in definitely needs the senior talent and the capital, right? And I think with what we've seen with COVID and remote, there is access to talent now anywhere, right? Capital, we're seeing a lot more investors looking to invest in different ecosystems. But I think what makes Silicon Valley special is the idea of ambition, right? So Paul Graham has this incredible essay on cities and ambitions where he talks about how every metropolis has a collective drive. So if you are in LA, people are typically driven by fame. If you are in New York, you might be driven by wealth. If you are in Boston, knowledge, DC, connections, and then in Silicon Valley, it's about power and influence, right? So I think despite the fact that, we're living in a very, very global world now, I think one thing that Silicon Valley is still, quote unquote, top notch on is this idea of ambition around influence and power. So I don't imagine it being replicated. And I also believe that every city can have a different ambition and still be super successful, but it's going to be interesting to see how those unique ambitions translate to, a startup ecosystem as influential as Silicon Valley.
Yeah,
I think she's right on. So, yeah, so you see a lot of ecosystems now building all across the globe. Okay, there is a very nice ecosystem on the East Coast now. Okay, there is very strong ecosystem in San Diego area, in the Los Angeles area. There are ecosystems I have seen in Brazil. Okay, very strong, throbbing ecosystem in Brazil, which is catering to that local market. So most of this can flourish. Okay, and they have learned the lessons from Silicon Valley, as I would say. But there is one thing about Silicon Valley. Okay, it continues to be a rich ecosystem that has the experience. It has seen several downturns and survived those downturns, and the ability to take moonshots, okay, is very strong in Silicon Valley than in most of this. So you can see Facebook, WhatsApp. So what kept us connected during COVID? Facebook, WhatsApp, right? What kept us working? Zoom and Slack, okay? What kept us entertained when we were locked down? Netflix, YouTube. What kept us avoiding the stores? Amazon, Instacart. All these are babies of Silicon Valley, right? And hopefully, a lot of them are getting cloned in other regions, where there are new ecosystems that are being built. So there is nothing that will prevent anybody from building an ecosystem elsewhere. So it's just a matter of time, how well are they able to build that, and whether they have those deep pockets there to make those moonshot investments.
Okay, well, thank you. That's great to know. Now we actually technically we only have 2 minutes left, so we need to wrap up. But so just a last question. We are allowed to go on a few more minutes, but I don't want to really take up more of your time. So very quickly, this has been fascinating, and for the audience here, we have a number of 95 people here from exec MBA students. So if you have to just quickly have 1 or 2 top lessons you've learned about founding and running a startup or funding a startup here, that would be valuable to the exec MBA students, our MBA students as well, then if you could share that really quickly, managing and leading in COVID times, that would be great. So just 1 quick sentence and then we'll close. So Angie, you want to go first?
Sure. I think to just echo what both Sanjo and Sudhir had mentioned, be flexible, be in control of your own destiny, and you can do that by building a sustainable business.
That's great.
Yeah, maybe I can go next. So I think I spoke about this already, but building a startup is not a short-term journey, so that you are committing many years, probably a decade of your life to something. So ensuring that problem founder fit is there. If you're in a stage where you're going to start a startup, that problem founder fitment is very critical. And because you're going to spend so much time in that space, and a lot of your life will revolve around that space. So ensuring that that is there and keeping it lean early on, so that you have more options, and when especially early stage, because there are some, you never know how long it will take you to get problem product fitment or product market fitment. So keeping it lean early on will give you that ability to build something which is sustainable and more long term.
That's great. Sudhir?
Yeah, I'll just leave you with a 4C model that I use, that you can use in crisis situations like this to define your roadmap and business model. The first C is the constants. What remains same? What are the enduring truths? The second C is the compulsions. What can you offer now that is essential or must have for your customers? The third, obviously, is the customer itself. Who are your new customers? Because your customer has changed. Your product market fit is destroyed, right? And what do they need? And last part is the creativity. Okay, what is possible now that was not possible earlier? Okay, so with this 4C model, I'm able to take a lot of startups through this crisis and help them look at the new opportunities there.
Terrific. I hope you all got that, the 4 C's. Well, thank you so much to our panelists, Angela Tran, Sanjo Jose, and Sudhir Kadam. And I'm Anu Basu, San Jose State University. Really great to be here. And I hope you had a really great session this year. And today's panel, I hope you learned and got great insights. I did, certainly, and I found it really insightful. So thank you so much, everybody.